Reporting cash on VMS is not just reporting your reconciled cash, it's a formula. We're taking all reconciled cash, including FSS cash. We're going to add and subtract any inter funds, because inter funds really represent cash. Back out the FSS liabilities and back out current liabilities. This will provide the reconciled cash to be reported in VMS. One tip to think about: you must have enough cash to cover any restricted net position. This is one of the main reasons HUD is asking for this cash to be reported in VMS in this manner. They want to make sure that we're only using that HAP funds for HAP money. And this is a way to reconcile any cash that should be attributable to RMP. The Housing Authority has enough cash to cover that restricted net position balance. How do we calculate restricted net position? We take that beginning balance. We're going to add any HAP disbursements funding from HUD. We're going to add half the cost of fraud recovery or the lesser of cost of recovery. We're going to add back any FSS escrow forfeitures. Back out any HAP expenses and any adjustments for HAP that were held. And that's your ending restricted net position balance. The ending balance is going to roll forward as the beginning balance next month. UMP will increase each month for interest earned and the greater of 1/2 of fraud recovery or the cost of collections. When administrative fee revenue is greater than administrative expenses, administrative fees do not accumulate to UMP to the end of the fiscal year. When administrative expenses are greater than administrative fee revenue for the month, UMP will decrease for the month because actual funds were used from UMP to cover those costs. At the end of the fiscal year, the authorities should match the VMS UMP to the general ledger UMP. Other income expenses. This specifically has to do with MTW agencies, and these columns are talking about the first one, unspent fund source, an MTW PHA reporting of commitments and obligations that have been made for future expenditures or currently unspent funds. The Housing Authority is going to report the source of unspent funds in this field. Type 1 account is the projected expenditure of the field, that the actual expenses or another category to be added by the PHA. We're going to describe the activity. We're going to say how much money is committed but not yet expended. The type of commitment, the specific action, what it's being used for by the PHA, and the date of the commitment action. Funds obligated is when the Housing Authority has money under contract to be used. So committed, we're saying this is what we want to use the money for. Obligated, we have these funds under contract to be spent. The type of obligation, we explain it. The date of the obligation action, the total of the obligated amount that has been expended on the activity, and the projected full expenditure of the obligation. We can have additional comments regarding expenses. Other expenses incurred by the PHA for the voucher program and must report. Sometimes HUD may ask a PHA to justify and explain certain expenses, and these fields will be used depending on the number of expenses. There's up to 5 types of expenses that can be used. The MTW expense category is other one, the type of expense incurred, and the comments. Up to 3 categories for the MTW expense categories. Disaster, unit months lease and HAP disaster. There are up to 4 types of awards that can be entered into the VMS. We're going to have disaster name, number of families assisted, the amount of HAP assisted, security deposits returned, the same with utility deposits and utility deposits returned, related administrative costs, and the broker fees paid to a broker for the month. We have the Housing Authority information, contains the name and number of the PHA. Appendix A of the VMS user manual provides detailed descriptions on what is entered in each field of the VMS. Thank you for listening, and please contact your FMC representative for more information. Please select Next on the player and answer a knowledge check question.